Now let's look at strategy number 3. In third strategy, what I'm trying to explain is you can defer capital gains tax if you are selling your property through a vendor take-back mortgage. So what do I mean by that? Let's assume you are buying for a commercial or investment property. You are the seller and you are offering your buyer a vendor take back. If, for example, you have $700,000 worth of property that was sold and you purchased it at $500,000, so your capital gain was technically $200,000. So my house, I purchased it at $500,000, I sold it at $700,000. My capital gain is $200,000. That $200,000 is technically my capital gains for the current year. Now, I don't want to pay capital gains taxes, $200,000, because that would get added to my personal income for that particular year. And then I'll pay taxes on that. We all know capital gains taxes are 50% taxable. So if my personal scenario, half of this would get added to my personal income, it will shoot me into the highest marginal tax bracket, which is 53%. And basically I'll be on the hook to pay probably like $50,000 in taxes. How can I avoid paying that taxes? Option is using a vendor take-back mortgage. Now, if vendor take-back mortgage means is I will allow my new buyer to pay the difference, which is the $200,000 of capital gain in installments of 5 years. If I allow him to pay him installments of 5 years, he would not need to pay me $200,000 of gain in one shot. He would be paying $40,000 per year for the remainder of 5 years. What does that mean? If I increase the timeline that I received this $200,000 from 1 year to 5 years, now I need to only recognize $40,000 every year. I do not need to recognize the entire $200,000 of capital gain in 1 year. If I recognize only $40,000 instead of $200,000, my capital gains tax is reduced automatically because I am basically only reporting $40,000 of income in the current year and the 40 in the following and the 40 in the following. So that will basically not shoot my marginal tax rate to 53%. It would bring my marginal tax rate to maybe 40% or 37%. So this vendor take-back mortgage can help you reduce your capital gains tax because you are electing to receive the capital gains in installments over the next 5 years rather than in 1 year. So it's something to think about. If you had a closing coming up and you don't need the money right away, giving the seller the option of vendor take back can help you reduce as a seller your capital gains taxes. Option number 2, the same scenario is just like vendor take back, we can also do a joint venture agreement. In a vendor take-back mortgage, it was most likely, you sold the unit and, it's not yours. You don't have any equity in it. But let's assume the situation was different where you had bought a property for $600,000, invested $65,000 in renovation, and you found a tenant to rent this property for $2,500 a month. Now your total cost of the property is $665,000 and you decide to sell the property 3 months later for $765,000. 765 minus 665, which is what our purchase price was, results in $100,000 capital gain. How can I minimize this capital gain? Let's assume someone comes to me and they don't want to pay capital gains tax. How can we minimize or avoid paying this? The only way to do this is having a joint venture agreement. What does that mean? It means when I sell the property to the new buyer, I will sell the property, I'll remove my name from the title as well as I'll remove my name from the mortgage, but I will still have a bare trust agreement, which will show I still own 5% equity in it or 50% or 10% equity in the home. Because I own a percentage in a property, even after selling the property to a new buyer, I technically have not disposed of the property. This means I don't need to report a capital gains tax. So just to recap, I can create a joint venture agreement, which will dictate that I'm not on the title, I'm not on the mortgage, but there will be a bare trust agreement, which basically gives me some equity in the house still, which could be 5%, 10%, 20%. I have sold it, but I still own a little percentage of it. This can work perfectly if you're passing this house, your investment property to your cousin or your sister or someone who you already know. And they can certainly, help you in terms of reduce your taxes, because now what could have been $100,000 capital gain on your taxes is just becoming, you can defer it because you technically have not disposed of the property.